before you start recording, I'll just say, we're
recording.
8 days away from a potential, now it's actually more probable Fed rate cut. So, maybe there's a hold off on that as well.
Could be fun. Do you want to give us a little rundown of the sessions, the Asia and the London and all that? Well, since we got a little time before the open, Brian?
Yeah, yesterday for me was kind of an odd day. I sat down at like 9:20 and was done trading by like 9:40, and it was very odd and frantic for me. But I just kind of based it off of what I was seeing. But one thing I noticed yesterday, London did not sweep Asia, which it's usually indicative of very bullish action. So I was kind of.
Do you want to share your screen? You want to share your screen and talk to this, or?
Yeah, hold on. Let's do this. I got to swap over to my other computer. I'll be right back.
All right, all good. So, all right, I'll bring my screen up until Brian gets back with his. And there we go. Okay, there it is. All right, same old thing on my screen, 30-minute chart. I've got a couple of sim trades on here just to experiment with a few things. It's actually two different trades, but they ended up being the same entry, same place, similar place. So anyways, they're on. Seems to work. And hey, Sujit, you're back. All right, hello. Well, this is your show, man, if you want it. Sujit and Brian. Brian's here. He's going to give us a rundown of the sessions. But if you want to go through pre-market stuff, go ahead. We have a little time.
Yeah, I can quickly share. But if you have anything, you can share.
Nah, my stuff can be shared during the open as well. There's not much really going on my screen. So
yeah,
that'd be more useful with the stuff you talk about for everyone at the moment.
Yeah, so let me share. Currently, just looking at the NQ chart. So on a daily perspective, so its price is looking quite bullish at the moment. From this low, we made all the way till 25,500, and this is just a consolidation happening. So in yesterday was the inside day, and today again the inside day. So my thought process is any break above this yesterday's high, or anything above the this opening price of the previous day. I think it could be good long all the way till 25,800. So because we don't have much level, so on a daily perspective, we don't have much support and resistance has been built. So and on a 4 hour or so, if we see, so this was the resistance previously. So we have reclaimed back this level quite strongly at the moment. So we have tested this level 1, 2 times, 3 times, and we are the prices got acceptance above the 25,200. So any break of this consolidation zone will lead to the next zone, which is this 25,700 and 25,830. At the moment, I am more towards the bullish side as per the price action. And let's switch it to the 15-minute. So same here is a consolidation chop is on. So anything above the previous day high. And also I found one good indicator which plotting the monthly open, weekly open, previous day high, previous day low. It's quite good. This is a key level. I will share this indicator if anyone want to use. As you can see, this monthly open and weekly open, we have reclaim at the moment, and price are gonna test or likely gonna test previous day high. So watch out about 25,550 for this target. And if we continue, in case we make a swing failure of this previous day high, then the range will continue. So the choppy zone will continue. So my area of interest only about 25,500, 25,544 to be exact. Yeah, that's it about NQ. Let's go to or Avi, you can review for the ES. Maybe I'll quickly look at the stocks. Then
you can go ahead with the stocks, and then I'll go into the ES.
yeah, yeah,
easy enough.
Yeah. I
since you
haven't
got it.
looked at the chart, but yesterday Tesla and Apple was stronger. So let's review the strongest name. If you remember yesterday, so I was saying that we have reclaimed about 415, and prices are moving stronger towards the upside. This is looking bullish to me. Yesterday, what happened? So this was the price action, just a consolidation. It's holding well above this resistance zone. This was the resistance. Price got acceptance at the moment, and at the pre-market price is at 432. And if you look towards the left hand side, so any break above the previous day high, so this is the previous day high. Anything above 433, I'm looking for next target 442 and 450. For the downside, in case we break this support, so this is the consolidation zone. It's forming consolidation, and anything below 425, then the rotation will work towards the 415. At the moment, I am bullish as per the price action. So anything above 433, 442 is the target. So I will set an alert here for the Tesla. Then Apple also, it was strong yesterday. If you see on 1 hour or daily time frame, this was the choppy consolidation zone. So price were range bound between 266 and 276. And yesterday we got a really good retest. Not yesterday, but some days back, we got a retest of 276. We form a new consolidation zone between 276 and 280, and then yesterday we had a break above this high, which is 280. So at the moment, it's in parabolic move, at least on the 15-minute time frame. So any retest toward this high, I'm looking for a reaction, which is 280. And let's switch to the extended trading hour to see the price action on a 15-minute. Yeah, it's just a chopping around 283 and 283, and nothing is happening. So maybe above the pre-market high, we can get some more momentum. But I would like to see the retest of 280 for any reaction towards the upside. And if we go to a if we go below 280, then the next target is just 1.279. So look for the reaction around 279. Quite strong at the moment, Apple and Tesla. Let's look at the Google. So yesterday we have drawn this channel, and we said that this is the aggressive move, up move, and now the correction is happening, and it's moving in the lower low and lower high fashion. So I don't think momentum is there for the Google at the moment. I don't think I'm gonna trade Google today. Any interesting ticker you guys are watching? Because since morning I was away. Maybe if you're watching anything or anything pre-market up, let me know. Then we can review together.
Here we go. Nasser got MSTR.
Yeah.
Nasser always in with the exotic stuff, eh?
Yeah, it's going quite aggressive towards downside at the moment on a daily time frame from 360 to all the way till 160. So this is the range high. This is the one daily level. This is the important level daily, and on a lower time frame, we are in quite aggressive towards downside at the moment. So any retest of the daily, look for the short 184 and 200 is the level. In case we reclaim 183.95, which is around 184. So on the 1 hour also we had this resistance. So if we get a reclaim, and if we have bullish bias, or if we reclaim and hold above the 184, then the target is 200. But as prevailing trend is quite aggressive toward downside. So I think if you go with the trend, so it would be beneficial. So any short opportunity or any bearish pattern around 184 or 200, I would like to go long. So at the moment, even if on 1 hour, if you observe the price action, this was the consolidation zone. So prices were moving in the range, and then we had a breakdown. This was the fell breakdown, and we reclaim. So we are likely to test the 180, which is a range high, and 184. So keep an eye.
Can I ask you a quick question about this?
Yeah,
Does the breakdown that happened actually yesterday
this one.
after a massive, I would say,
Yeah.
support at 167, we had actually a sell-off, which was
Yeah.
immediately bought back up actually quite heavily. Does this indicate anything at all?
Yeah. This is. I mean,
Test.
I would I would say this is liquidation. Probably these are the liquidation, and also if you observe this bit MSTR chart is heavily depend on the Bitcoin move. And if you observe yesterday what happened, yes, Bitcoin were going down aggressively, so the sentiment was bearish, and also price action wise it was a breakdown of 167. So what is this level? I need to find why we have a support here. Maybe I'll switch to the higher time frame, daily time frame. So your question is why we made a move to a downside, or what was the question
No,
exactly?
my question was when it drops like that and then it reclaims so quickly and so massively, then does it mean that
Yeah.
actually we are in a bullish trend, or we will?
No, it doesn't say anything about the bullish trend. So at the moment on higher time frame, we are quite bearish. Okay, so it just reclaim the smaller time frame range. Okay, so it doesn't. If you want to, if you want to play around this level, how would I? So how would I progress? So let's say this is the level. So on a smaller time frame. So if you see this is the support, this is a support. If it's support, and I would like to go on a 1 minute time frame for any short entry of below 166, 166 point exactly at 167 to be precise, and then capture this move. Okay, now what happened during the open? It has reclaimed this level, right? Now the thought process is we should not have reclaimed this low. We could have got a rejection. So we got a reclaim of this level. So you can play the range. So this was the range previously. Now we made a fake out uh, and reclaim back. So you can play the range towards the midpoint of this range or towards the high point of the range. This is the midpoint and this is the high point. So if you once we got a reclaim and we had a bullish candlestick pattern, then your stop loss you can keep below 166.38 and target. This is a massive target, right? Maybe 1 is to 5, 1 is to 6, 1 is to 7. So just play the range and see the price action, and based on that you decide. So that is what my thought process on the intraday perspective. And from a bigger perspective, we are in a downtrend. So it's no way it's saying
Thank
that
you.
we are gonna reverse. So I would say play level by level. Don't have a exact. I mean, don't have a bias that it's gonna drop from this level only. Even if it get a drop, if we see the bearish candlestick, simply take a trade and keep a stop loss, and the outcome we don't know. No one knows the outcome. So simply you can plan the trade as per the level. So this is what the level is for. So you can plan better, and you have a small losses in case we go wrong, and you have bigger profit in case the trade play out. So that is why the importance of the key level. So we don't predict at the level whether it's going up, down, or it's gonna sideways. Anything can possible. So our job is only to react at that certain level.
Right, good stuff. Anyone else? Anything exotic? all you guys in Europe are all full of it.
Spring test during accumulation. Yeah, Wyckoff. Brian is saying about Wyckoff.
Yes, it's all there. Good stuff. Cool. Thanks, Sujit. Thanks a lot.
Yeah.
Brian, you got a few minutes if you'd like. You want to go through the ES and the sessions and where we stand now as we go into the open? If you're up for it.
Brian, I want to say something about your session, Terry. I saw one indicator in the thread I posted, the algorithm trading and backtest, right? So result is quite impressive, which what is trying to do is plotting the Asia high and low, and in the London session, if it breaks below or above level, or if it does the swing failure at the Asia high and low, then take the opposite side trade, which you explained. So the results are quite amazing. You can check out if you are interested, because your trading strategy is based on that logic, I think.
Very,
Yeah, that is interesting. Cool.
yeah,
Thanks for backtesting.
it's nice to have someone else back test it. Let's see here. So, I mean, basically what I was looking at yesterday, I didn't get a lot of time, but, you know, again, Asia I do is these like pale colored ranges, London, the blue range. Yesterday, we did not get a sweep, which is indicative of like bullish momentum to the top side. And we did get a move up, but, you know, this drop here obviously stands out to a lot of people, but, you know, it's against Friday. This is Friday's close here. We've yet to be able to get it towards that line. This morning, we're kind of back in that range where sellers came in yesterday. And, you know, this is today's range for Asia, and London is just sitting here. So London, I would say that Asia, you know, started trending, but then, you know, or started ranging and then trended upwards. And to this point, London is just in a range. Now it's kind of an expanding range, but it's still a range. It hasn't made it. So that'll cause me to be a little bit cautious at the open, with the fact that, you know, this levels, you know, we've got one down here from last, we kind of played with last week, but, you know, we've been toying with this line since Friday. And again, that's just, you know, another sign that we're just kind of sitting here and, you know, waiting for something to get us moving. But, you know, to this point so far, it looks like it could be bullish. I mean, we're $1.60 away from cracking Friday's high and moving towards the upper end of the expected move for the week. So levels and reaction in and execute.
Cool. Thanks. Always interesting. I never paid attention to this until you started talking about it a few months ago. So I am curious.
If you notice, you know, like visually, it kind of, like I said, it gives me 3 boxes. Like it narrows things down into 3. So it's even less things to look at, even though my screen is like very busy looking probably with the colors. But, you know, even want to say day by day, you know, Asia's here. Today we have a higher low, higher high for Asia session. You know, so session over session, as if these were candles, you know, where we have a higher high, higher low. You know, do we get that same, you know, we've already broken yesterday's London high with London session so far. So, you know, to what I think T was saying earlier, like we're like, we want to be bullish, but like we want a reason to really be bullish. I think we need it.
That's cool. Very interesting. Thanks. Well, I'll get my screen up, guys. All right, there you go. So what I've got here is the 30-minute chart on the ES. And, you know, one thing, if you looked at what Sujit's doing here, he's finding these levels. And one thing that's, I think, very important is he's visualizing what could potentially happen. Like identifying the resistance, for example, and then if it potentially breaks out, then retest, drawing that on your screen with the drawing tool. I think that's really powerful. Just visualizations. It works for so many things. Athletes and musicians do it all the time. Very powerful stuff for candlesticks. So, you know, take a note of that. I think that's really important. So as far as finding levels are concerned, again, seriously, just zoom out. This is very zoomed out. You can see, you can hardly tell what the candles are doing, but I'll give you a little bit of a clue of how I like to do it. Just simple horizontal lines. You can see over here, firm resistance twice in a row right there. See that breakout, retest, you go long. I mean, it's giving you that whole perfect setup where resistance was very firm. Then it got there and it breaks out. You don't want to go long here. You don't know if that's going to be a false breakout. It was firm resistance just recently. But once it retests, it goes up, comes back, bounces off, shows you plenty of strength. Whatever indicators you like to look for strength, it's right there. And then more recently, yesterday, I believe, look at this, came back down, double bottom, where just above the level that we marked, which is turns out to be that resistance when it did the retest, just about the breakout right there, just about in that zone right there. So you can identify a clean setup at a level. That's basically how I've been trading for years and years and years. Not much else, really not much else. And here I'm just looking at one time frame, the 30-minute, not even looking at the weekly or anything, just zooming out and you can find things. So that's very powerful. The thing about levels is you're basically identifying big turnaround points on the chart. And if the price gets there, you got to realize there's three possibilities, right? It could treat that level as support, it could treat that level as resistance, or it could get stuck at that level, get choppy. So there's always three possibilities. You need to know, you need to have well-defined indications that you look for when the price gets there, so you know what to do. If you find it to be support and the buyers are taking over, you have that long, and the stop, you should have a definition of where that needs to be and a definition of where the target needs to be. The same thing if it's resistance. Also, you need a very good and clear definition of what is chop, what identifies chop at the level. And then you know what to do. Don't touch it, which is what most of you don't do, unfortunately. Always get stuck in chop by basically zooming in too much most of the time. So anyways, that's how I do levels. That's how I've done levels. And one of the key reasons to do levels is it keeps you out of the market at all other points, at all other places. But to add to that, to basically evolve trading a little bit further, I've been toying with this idea, and you guys have seen this before, where I'm looking to perhaps get involved in trades, not at levels, basically at any point in the chart. But you got to be very precise about that. Why would you just get in? Well, because the buyers are taking over or the sellers are taking over. If you can truly identify that without your brain just messing with you saying, get into the market, looks like it's going up, that's the real pitfall there. So it's something to think about, because the levels I use nowadays, I don't have them on the chart. You guys know it's the every 100 points. Right now it's in the middle, so I'm not even bothered. I've got a few sim trades here. If it gets to one of these 100-point levels, I'll put them back on, and I'll see it take a live trade today. But anyways, these sim trades here are just playing with it. If you look at what it's done so far, just the recent past, right here, very bullish and consolidation. During the consolidation, you see this hammer. Again, the perfect continuation setup I look for when it comes to naked trading. And the entry is the new high. So that's basically where I got in. That new high, the stop is below the hammer, and I got targets based on previous price action and resistance up there. That's it. I've just done this for now. Nothing more. Just left it. Anyways, I'm experimenting with this. Let's see if it makes any sense. While I don't have a live trade to take, I'll just do this. So again, levels are important. It just keeps you away from other points in the chart. But you do know moves begin at other points of the chart as well. I'm simply trying to figure out how I can get into those and perhaps expand my trading while I've got nothing better to do. Anyways, that's that. Looks like the market is open. If you guys have anything you want to discuss or share your screen, please do. And let's see if we can have some fun with this. None of that Santa Claus stuff, okay, guys? You guys are playing with toys all day. Day trading. You don't want to blow up. Take your trade, put on the risk, and then de-risk. And then you stand a chance to make some money. So my interest is purely on the 30-minute chart. If it drops the big hammer here, that's when I'm out. You can see good setups here, even without levels. This thing came down. You have a clean looking double bottom. The entry would have been after the bullish candle. So that would have been the entry right there with the stop below. And you leave it for the rest of the day. Well, targets, you got targets there. You'd hit one, wouldn't hit the second. What else will we find here? This was Thanksgiving. It didn't want to go anywhere. I don't see a setup here to catch the long. Yeah, down here. I think I did take this in the sim. It was went up, consolidation, big old wicks, continuation setup, room to the left. The long is just above these hammers right there. You can have a tight stop even below the previous support. That works as well. Again, higher lows in this area. Look at that on the 30-minute chart. And this one turned into a massive bullish engulfing. So the entry is here at about noon. And you can use a stop below the previous support right about there. And you identify your targets overhead right about there. this short. I don't see a setup up here. Would have been fun, huh? Nothing. Anyways, so that's what I'm curious to do, and not going to put it into live trading at the moment, but things to look at. In the meantime, let's look at the live market. These things out of the way. A bunch of sim trades here. All right, what do we have? 30-minute, oh sorry, 1 minute ORB looks like on the SPY. Yeah, so just looking at NVIDIA. All eyes on NVIDIA, please. Oh, I don't even have all these charts. I have no idea now what to do. Could probably look at it on TradingView. If you guys want me to look at a chart, let me know. I'll look at it on TradingView. For now, I just got this until you tell me. But you really want room to the left. I'm telling you, one of the key things with price action, with naked candlesticks, is room to the left. You can see this put in this wick here, this bearish wick, but there's not much room to the left at all here. I wouldn't trust it for the short. Over here, there was room to the left. You can see it hasn't been up here in a while. Sure enough, it made a decent move. You know, you really want to pay attention to this. Over here, same thing. You got that wick, but not much room to the left to go down. So it hardly moved. This whole thing ended up as chop. And if you're too zoomed in, you wouldn't even know it. These are things to know. All right. There we go. We got 2 wicks now in the same place on this chart. You guys know what this is called? And you have 2 wicks in precisely the same place, one after the other, right here on this 1 minute chart. Tweezer, there you go. Nasser got it. Ivo got it. There you go. You guys been reading the books, huh? Yeah, tweezers. I've never been able to trust this setup. Only for scalps. I've been able to scalp off of them, but never been able to truly trust it for a serious move, to begin a serious move on any time frame I've looked at. I've explored it, but not quite. I prefer if there's one serious wick, one long tail hammer. Then you have a real move in that direction. Thinking makes sense, I guess, where if it pushed down, then it pushed back up again, then it pushed down, you're basically looking at chop. If you're looking at a 10-second chart or 1 second chart, it's chop. It's in a funny way. It's a mess. It's a great big mess. There you go. You got tweezers, but right now you'd be struggling with it, right? Anyway, still, even though the tweezers did happen in this case, no room to the left. You can see that, where it's all a mess. I mean, this is the stuff to stay away from. Don't blow up. Please don't blow up. Stay away from this. Oh, you got Ivo. RGTI, SoFi, AMD, LAP, LD. Oh my gosh. Everything, huh? Everything going up. Good. There you go, guys. Ivo's got a room full of screens looking at every ticker. You got any questions? Ask him. Yes, if things are strong, wait for an ABCD. Very good. That's it. Oscar, you look at a 30-minute chart. How back do you go? How far back? I go as far back as my eyes can take it. 30-minute chart. I'll zoom this thing out. There you go. As far as my eyes and my chart goes, it won't even let me go zoom out further, so I have to scroll back. So, point is, I don't limit that. Now, if I really need to know how far to go back, the price actions in this area, just go back till you see that the last time it was here, which usually you'll find something without having to zoom out too far, right? Especially on the SPY chart. You don't have gaps and stuff on that very often. So you can see right there, firm resistance just overhead, firm resistance a little overhead there. Also looking down, price there, but looking down, you can see it came down. Let's move it out of the way. Came down, double bottom, where there's some room to the left right here. Then pushed up, made a lower high, but then also a higher low with what looks like a good reversal pattern. Let me see. Yeah, there you go. Long tail hammer with room to the left, right? Came down, choppy price action, small candles, and then it put this long tail hammer with room to the left. The new high would be your entry, and you're in that long. Man, I should have taken this a few hours ago. So there you go. It's telling you a lot of things you need to know. And then it pushed up during consolidation. So you have this ABCD right down here to up here, consolidation. During consolidation, a long tail hammer. The entry is the new high. And that's the trade I'm in right now with the stop below. And I've put the targets firstly up here at this resistance. This is just a minor one, take off some position. And the real big one I've got is up here, which is the round number anyway, 6700. And I know that this is a double top chop area, so I put plenty of orders in here to liquidate the position. That's how I look at it. Not too much. Again, you can see most of the information I get that I need to get for trading or for putting on a position, for trying to identify how far it can go, or even if it's a good place to get into the chart, is by looking to the left. So bringing back the whole thing about using levels or not to use levels, well, to be or not to be, if you read Shakespeare. But if you're not using levels, where the hell do you get in? Well, you should know where not to get in, which is when there's no room to the left. Now, if you look at this whole section since Thanksgiving, there's no room to the left everywhere, anywhere. It's just been stuck here for a few days. You can zoom in a little bit and you can see it's actually put in really neat moves. Yesterday, that moved down, double bottom, move up. Up here, there was room to the left if you identify a reversal going down. I didn't identify it. I don't have a setup on this 30-minute pattern. There's nothing here. But the long down here makes sense. This is a good-looking double bottom, just how I like it. And here you go, another reversal, even higher than the previous, which, these lows getting higher, then setting up this perfect ABCD pattern. Everything to me is telling me it's pushing upward during this bigger picture consolidation. So if there's a possibility of breaking out of these previous resistance zones, it's setting up for it right now. And so that's why I got into this a little while ago, a couple hours ago. Again, sim trade, I'm experimenting with this way of doing things. So again, not using levels, but using the opposite, using price action to tell you where not to touch it, which is if it's crowded on the left, don't touch it. But if there's room to the left, there's a lot of money to be made. It's ridiculous. And what have I got here? 20 contracts. It's gone part the way to the target, to the small target. What is it? Let's look at the P&L side of things here. It's about $10,000 already if this was live. This would be on, how much risk have I put on here? About $10,000 of risk. It's at about 1 R. And that would be about 2 R just for the little partial event, 5 R or whatever it is when it gets there. And this is on a $50,000 account. So again, there's lots of leverage, which works both ways, right? You can go and risk your whole account, but of course, NinjaTrader won't let you do that. It'll give you a margin call. That's not something you should do anyway. Anyways, this is sim stuff. There's lots of leverage, lots of money to be made if you know how to do it right. So don't touch it when it's a mess. And when you get something going in your favor, let it run. Give yourself a chance. Really give yourself a chance. You keep partialing and small moves and all that, and you're never going to make it. It's like you're playing with pennies at the slot machine. Why would you do that? Wasting your time. So what do we got? NQ broke, previous day's high. All right. All the tech stocks are going up. All right. You guys are all into it, huh? Ivo and Sujit. Making me feel like I'm missing out, man. I don't even look at tech.
Yeah.
Cool. Enjoy it.
I was talking about it with Brian earlier, and I took a long in the pre-market. It didn't work out, but when the market opened, it sold off a little bit and it started buying. I jumped on it. It's printing, man.
Yeah, it's working out now.
Yeah,
and you're talking about NQ, right? The Nasdaq.
Yeah, the Nasdaq. Yeah.
Yeah, cool, man. Yeah, showed strength. Well, this is the ES, but yeah, broke out the opening chop.
ES is lagging.
Yeah.
Oh, good.
Very much. Yes, it's
Tech stock are going up at the moment.
Good. So the Nasdaq is a leading indicator for the S&P. Isn't that great? If you can prove that to me, the first $1 million I'll give it.
in the session. It's lagging, so they usually move together.
Yeah, it's lagging for now. Yeah, I mean, I don't know. I mean, I've seen it where it moves together and then it doesn't, then it lags, and it's, well, I don't know what, but I haven't found a way to rely on this correlation for putting risk on and managing trades. So, but if you have a way of doing it, that's great. If you can rely on it, that's the key. It has to earn your trust. So what's going on here? This is oil, which is not really moving. Gold, looks like it's moving around.
Silver and gold moving quite stronger since the last 2-3 weeks.
Yeah, you were mentioning silver yesterday too, right?
Yeah.
Well, this is gold for now.
The only thing with the silver, the tick value is really high.
What is it?
SIL.
SI. Oh no, but what's the tick value? So it's high. So is it? It's like a few $100s or something.
It's $5 per tick.
5 per tick. What is the MES? That's 250? No.
MES 2.5.
Yeah, 250 per tick. Okay, so double of that. Okay. Yeah, it's not as micro. And you need some white spaces, white stops on that sort of thing.
I'm sorry, MES 1.25.
1.25. Okay.
Yeah.
Fair enough. Yeah. Yeah. Trading these commodities is it's not for the faint of heart, from what I've read.
Especially the natural gas. This is the widowmaker. They call it the widowmaker for a reason.
Perfect. Well, I'm not married, so I can go trade.
No, come on, we still need you. You have community. Enough with the risk, please.
Oh my gosh, we're all gonna blow up doing stupid things.
Avi, it'll remind you a lot of Meta, like that.
Oh no.
Feelings it'll give you is Meta.
I have
I know how much you miss it. I know how much you miss Meta.
You're posing the shit on me, man. You purposely
never do that. Never. I would never give you PTSD.
Oh my god, you guys make my life so hard. Meta wasn't great, I gotta say. It was so hot when it went in your favor. My goodness. But
yeah, it's that hot girlfriend that you see out in the club, and you're like, yeah, like just talk to her like tonight, maybe go hang out, and it's a week later, you're like, man, I really can't get rid of her. I said I'd never talk to her again, but here I am, and
yeah, one of those
things
problems
are still the same.
Yep. All right, not gonna play with that stuff anymore. So natural gas out of the picture. I've got to stop getting myself into these kinds of situations.
Yeah, when you're looking at oil, like natural gas and some of the metals, really what you're trading with there is the algorithms. So not a lot of retail traffic, and that's kind of where just really reading the algorithms and market structure kind of come into play with those.
That would be interesting. So if you can really identify the patterns that they function on, or the keywords, or I don't know, whatever it is that they function on, volume indicators.
Yeah, I mean they respond really well to cams. And then also, looking on those higher time frames, so that 4 hour, 30-minute kind of daily chart, and where those big swing areas are is good places to find buyers and sellers.
All right, yeah, something to look at. I might put the cams on and start there with these metals and stuff. But really, I wouldn't look at them unless they're in the news.
Yeah, I mean, you're not going to get a lot of volatility and expect like big moves quickly. You're going to be looking at kind of a whole day trade and running a big range on those. Get the most out of them.
You want to get into them on a big day, like all of these days. Look how many small days and tricky days and inside days and such amounts.
Yeah, and that's like with a lot of news or something coming out. Gold may get, maybe silver may get some of that volatility that comes into the market. Some of that can like switch back over and flow into gold and silver and some things like that. But yeah, oil, you're going to need some news about war, or something going on in the Middle East, and other things like that, just to really get the volatility that you would look for and maximizing like a momentum trade.
Well, those make sense. Just gotta be super patient to identify those big days where there's big news and a gap, and then you might get it. But then you don't go scalping it. You find a good setup and hold it for the day.
Yes, I mean they're great. Yeah, they're great for running the range.
Yeah.
You can identify in a big area, buy, kind of where you would expect the low of day to be, a big buyer to be, and kind of run that ATR, just put that trade out there, maybe partial out a little bit, but really targeting that full ATR up that low if you can catch it. And yeah, you can get a great trade, but you're going to be watching it all day, or just, setting in that risk parameter and just kind of moving that stop loss off as you see that move. But if you're going to sit there and watch it all day, you're going to fall asleep and get pretty bored.
Nah, never watch it all day. I don't even watch these trades all day that I do now. Leave it. And I love this Ninja Trader automated thing. Just leave it. Moves to break even automatically. It's
I mean, and that's like what's great about the ES and NQ. Here at the open, you get that volatility and you get that move just like you would on a stock with an opening range breakout, or kind of taking advantage of that volatility if you catch a good trade and catch the momentum. But when you're starting to get some of those other less volatile, futures and contracts, you're really looking just to maximize like the range, the entire move for the day. versus just, short-term movement.
Mm-hmm. I get that totally. I like the futures. I'm telling you, it's so good, so much better than running
I'm
around
glad.
behind all these tickers, all that other garbage. Oh my
I'm
goodness.
glad. I'm glad you're liking them and getting into them.
Yeah, it worked. It worked nicely.
I mean,
There you go, guys.
I would
It's good.
imagine like reading the price action and everything that's going on. It's not anything different than you were doing with, the SPY contracts and stuff.
Yeah,
It's
same
still
thing.
kind of the same. It's just now you're not really trying to catch that gamma. You're just trying to catch that real big move and not worried about kind of all the fees and then, that theta and that time decay coming into play against you.
Yeah. Yeah, definitely. I'm telling all you guys who are curious about options. I mean, I went as far as I could with options. I really did. I pushed that market as far as I could. And there's
Oh yeah, and you pushed it further than any other retail trader could. Like,
yeah, there's nowhere else
seriously.
to go with it, and just go to futures and poof, it's a whole world.
Yeah, I mean, when you're pushing it so far, you're like, geez, like the commissions are just killing how much I can make now. So, what's the next step? And like stepping up into like that liquidity, and that's a futures market. That's kind of that next step.
It's good and it's simple. The time decay is not a problem. The leverage is all there that you would look for from options. You don't have the PDT rule, so it's easy to get into. Again, small accounts, watch the leverage stuff, go with the micros, 1-2 contracts at a time. You still got to use a stop loss. It is so many reasons to, even for a beginning trader, a new trader, to do it, rather than trying to figure out how to fund at least $30,000 for the PDT rule and then around behind Tesla, Nvidia, and all this other garbage. This is just easy. You're not stressed out before the open, and you can keep your job, trade whenever you want. It's a 23-hour market, so there's so many good reasons behind it. I can't believe we spent years doing other stuff.
And you have to look at it too. You were really trying to take advantage of the momentum and trying to catch that asymmetrical RBR with that gamma squeeze when you would catch a move. But I think you were starting to realize, okay, well, the commissions are killing me. So how much am I really, maximizing like those moves? Futures commissions are literally pennies on the dollars versus what you're going to make, especially when you start to kind of put that into what you're paying for stocks. You'll be like, I paid $20 in commissions for that entire trade. Like, hell, if that was a stock trade, I'd, with options, like, you'd be like $5,000 in commissions. So I got that gamma squeeze, I got that movement, but how much do those commissions and stuff take away versus just these pennies on the dollars that I'm paying, especially when you're trading full-size contracts and getting those moves.
Yeah, it got crazy. It ended up averaging $5,000 a day on just.
Well, dude, like you said, you literally maximize it and got the most out of it that I think anybody I've ever seen has done. With that, and then looking back at that, you're like, I don't know, does that make the most sense with my leverage and putting my money there? Maybe it does. Maybe you go to futures and you start trading really well, and you're like, okay, well, maybe I go back to options. I can start maximizing that a little bit more, but it's just easier. It's just a lot easier to trade the options. The liquidity is always there. Yeah, you'll never have any issues with the liquidity and finding that at all.
Yeah, this would be good not to have a liquidity problem. And here's the thing with options, they were built as hedging instruments mainly. So thinking about doing futures the way I'm doing it with these 30-minute charts and it takes hours to go, I might actually use options the way they're built as a hedge. So putting on these futures positions without a stop and just using the options on these futures as a hedge. So let's say if I'm long here, I'd buy a put contract, which will go down in value if the option goes, if the future goes up and the trade works, fine. And then, just take that little loss on the option, which will just go to zero. And this futures thing, it's the target, and that's where I make the money. On the other side, if it doesn't work, the futures thing goes down, and I don't have a stop, it'll just go down, down, and down. But the option goes up tremendously as it goes through the strike and all that. I just liquidate it at the end of the day. The loss is minimal. And I can calculate the fixed loss. You lose $1 for dollar between your entry and your strike, and you just calculate that. It's not difficult. And at these sizes of contracts, let's see, when I get to my biggest size, I'll be at 50 or 80 contracts, something like that.
And still, you will not have any issues with liquidity.
Yeah, liquidity won't be a problem.
even if you want to limit in, like even if you want to get in on the bid to go long and partial out on the ask, you will not have like any issues getting filled like through that liquidity.
Yeah. So that's something I'm curious to do. Let's see. What's good about that is you don't have a stop. So if the futures position here goes down to where you would have your stop, you don't actually stop out. And then if it goes back up in your favor, you're still in the position. So there's that little advantage, right? That's what I'm trying to take advantage of, if it makes sense. I haven't really done this, but this is quite a natural way of using options, more than what I was doing before, which was I was really abusing them. I was just going long all the time, and going as heavy as possible, capture the gamma going through the strike, all that stuff, 0 DTE, and yeah, it's all a lot of momentum stuff. Oh well, good man, good stuff. What do we got here?
Thanks again for I believe it was Friday. We had that very in-depth, long conversation about futures and your experience with prop firms. It's got my wheels spinning as well.
Yeah, and I was telling I and I have no idea what happened on my mic. It caught everybody else talking, and then it was just catching my mic intermittently. I'm like, I don't know, I didn't do anything different. So, I told Avi I can, plan and kind of redo that and go through it again, because there's actually some other stuff I would like to cover, like about how much I absolutely hate Trade-A-Bait.
I kind of felt that a little bit.
Yeah, well, my hate has increased just over this last week of Trade-A-Bait. So you have to babysit it, and really it's just best to connect those accounts, those Trade-A-Bait accounts, to NinjaTrader, and just set everything in NinjaTrader, because NinjaTrader is just way more reliable than Trade-A-Bait. Trade-A-Bait is about as reliable as what's the most least reliable thing that you can think of. That's about how reliable Trade-A-Bait is with putting in your orders and grouping everything together. Like it's terrible. Like it's just terrible.
There you go. Yes, you want to do it again? Do another conversation, or if you would like.
Yeah, no, yeah, I'll definitely put something together, and then go through on how to link those accounts then into NinjaTrader, and just use NinjaTrader. Just link everything to NinjaTrader. You can keep an eye on it there. NinjaTrader is fantastic. I love it. No problems. And Trade-A-Bait is terrible and tons of problems. So if you like headaches and like being really frustrated throughout the day, like Trade-A-Bait's great for that. It'll definitely make you aggravated and frustrated and pissed off.
The hell with that. What do we got here, KD? You're talking about natural gas is cyclical, so you can, swing it. Yeah, there's one way to go. If you identify the cycles and you know how that works. Events like wars and pandemics. Cool. I like that. Hey, KD, if you want, share more of that with us.
Yes, and pork bellies, man. If you really get a good eye on the pork belly market, you can really kill it out there. And soybeans. Soybeans is another good one.
Yeah, so
just joking.
how I do natural gas, it's nothing very sophisticated. There's just some leveraged ETFs. One is BOIL for the long, BOIL, and the opposite is KOLD for the short. These are smaller products than just playing futures directly. So I like to average into them for a swing position once the price gets to an extreme. So right now, as an example, natural gas is around that $5. So I just this week started a small short position. And if it stop there is some external factors, it's easy to stop out, but you're at the expected top of the range for the price.
Oh, that's really cool. There you go, guys. There are a million different ways to make money out of the financial markets, right? You don't have to go all ORB crazy. Plenty to do, plenty of opportunities. One thing doesn't work for you, find what does. Thanks, Katie. Good to know. See, I have no clue about this stuff. I haven't even looked at it. What do we got here? So once I lost 50K less profit. Oh yeah, just to get out of the trade. Yeah. Oh man, the liquidity. Just can't even exit the trade. So funny. Yeah, sitting at like $250,000 in profit. By the time I liquidate to exit the position, it's at 200,000. What the hell? It just, I don't want those problems anymore. Things like that. We got SPY at the low, Q's at the low, IVO. Yeah, that's just chopping around. All right. All right, guys, we'll end the recording here.